In 4 years, we went from zero to 300 million in real estate sales.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Jay Bourgana. Jay, how are you doing today?
Excellent. How are you?
Man, I'm doing fantastic. Thanks for joining me. A little bit about Jay. He's a veteran management consultant turned business owner, experience in banking, manufacturing, management, consulting, including 10-year stints in China and Europe. Currently, Jay resides in Oahu, Hawaii, with his family. And so, man, you just been all over the place. Started Homearly Real Estate Group, grew that, recently sold it. We'll dive into that as well. And now Jay is buying businesses, flipping businesses, just doing a lot of cool stuff. So excited to dive in, Jay. Why don't you give our listeners though a bit more about your background, and then we'll really get into some of the meat.
Yeah. So I'm originally from Morocco. I grew up there. I went to school a little bit there. As soon as I could work right out of high school, I um, needed to work right away. I came from pretty poor background. And I thought of myself, okay, where if I wanted to learn about money, I didn't know anybody around me who knew anything about money. So money's in the bank. Let me go work for a bank to learn about money.
Mm.
And so I worked for a French bank in Morocco, and I worked for them in Europe, Paris and Brussels, and for a couple of years. And I did pretty much everything from consumer banking to business banking to trade, international trade, anything you name it, I've done it within the bank. And having been in Morocco, having been in Europe, around that was the late 90s, there were very little opportunities, if you will, to grow and build, wealth. And I figured the next place to go would be the United States. So I landed in Southern California late 2002. And I worked for a mutual fund. I wanted to kind of like, piggyback on my finance experience, worked for them for a year. I didn't really care for it that much. And I said, okay, I'm gonna make a 180 on finance and then go the other way, go toward entrepreneurship and or just business, working in the business. And so I went into manufacturing. I worked for this uh, home decor, gift product, health and beauty product manufacturer. We were headquartered in Southern California, but we had a facility in China, and I worked for them in Southern California in operations for a couple of years. I went to China for on the project for 2 weeks. I stayed there for 4 years, and I ran a 1 million square foot facility with 3,000 people that worked there, lived there, ate there, did everything there. So we had clients from Walmart to Target to Bed and Bath Beyond to Sears to any retailer you can think of. And it was wonderful. It was great. I get to travel China, to get to know a lot of people, to manage a really nice operation in the language that I didn't really speak that much. I learned a little bit, but it was great. And it taught me that if you can manage people in a different country, in a different culture, in a different language, you can manage anybody anymore. And the concepts of managing people, building good businesses are the same, and they apply everywhere in the world. And 2007, 2008 happened, and every retailer that we worked with gotten creative in filing or picking a chapter of bankruptcy that's going to allow them not to pay us. And Bank of America was going through its own challenges. They took our $100 million line of credit. And at the time, we were almost $1 billion in sales, and we went out of business within 90 days.
Wow.
Yeah, so within 90 days, I was selling the racks in the warehouse. And a lot of the guys, a lot of the executives that were in the company went to different companies, found jobs, other industries. But they always knew that I was kind of the turnaround guy, the guy that comes, the fix-it guy, the guy who comes fixes operations. And after 2007, 2008, every company was a fixer, if you will.
Yep.
Every company
Yep.
became a turnaround. So I spent about 4 or 5 years just traveling the country, traveling the world, going to different places, fixing companies, operations, systems, processes, and all that. And it was a lot of fun. I had a blast. I was still single, and yeah, I had a good time. I enjoy the process of transformation of a business. And 5 years into it, I kind of got tired. I was traveling 100% of the time, and I said I'm going to take a year off and reconnect. So I went back to Southern California, reconnected with some friends, and just so it happened, they had bought houses around the same time, and they were telling me how great it was to be a homeowner, or how great it was to how much of a hedge against inflation to buy a house in 2011, 2012. And I picked up the bug, and I went on Zillow and started looking for houses. And I bought a couple condos in Long Beach, California, and I saw value go up while I was in escrow. And I'm like, all right, there's something there. And I wanted to learn more about real estate. And at the time, there wasn't a lot of education on YouTube, or I don't think there was YouTube at the time. I don't remember, but there wasn't a lot of, what's available today. And
Yep.
so the silly, um, impatient me, instead of digging and researching more, I just went and said, hey, let me get my real estate license and I'm going to learn real estate. And, and around the same time, I met my wife, and we got engaged, got married, and I got my license, got sucked into real estate sales. And I said, okay, now my reality is real estate salesperson. And it's good because I'm geographically, in one place. I'm not traveling all over the place all the
Yep.
time. And so I gave it a shot. So in 4 years, we went from 0 to 300 million in real estate sales. And we had a large independent that did about 4 billion in sales at the time, came by and said, hey, we want to acquire, we like what you do, we want to acquire you guys. So I sold 70% of the company. I stayed on board, I had a contract for 3 years. We doubled that instantly at the merger, because they had a division that doing something similar. They just eliminated overhead, and then we doubled every year after that. I stayed on board for about 3.5 years. Halfway, COVID hit, and I was looking at myself trapped into managing through Zoom. So if I'm going to do Zoom, might as well be somewhere nice. So we came here to Hawaii, early 2020. And I figured at the time, I figured it's going to be a 2-year ordeal. And so we've been here since. We love it. The kids love it. The kids are homeschooled, and we love it. And last end of 2022 or 21, end of 21, I sold the remaining shares. I exited that entirely, and have been essentially acquiring small businesses, and with the intent to either hold or resell.
Love it. So let's unpack some of that. So the small businesses that you are purchasing, what kind of, are you certain size businesses that you like?
Yeah, I like anything between 750,000 and $2 million in EBITDA, which is earning before interest, tax, and depreciation.
Okay. So essentially, not exactly, but close to the same for real estate people, similar to NOI, net operating income.
Yeah, yes, pretty
Yeah.
much. Yeah. So
Okay.
anything 750 to 2 million.
Certain industries that you really like, or is there some that work better than others?
I like home services, anything from HVAC, roofing, insulation, restoration. I like uh, there's dish of IT, technology, managed services, what they call managed services, which is just those outsourced tech guys that come to companies and help fix their server or do security for them. I like non-medical health businesses, um, anything from like the IV guys to the Botox guys
Hmm.
to the stem cell injection guys. So those are great as well. So they're in general, they're low capex businesses, they're service businesses, and they're essentially almost like a labor arbitrage, if you will, with the component of flex service. So yeah.
So you're buying a business. Are they typically distressed when you're buying them, or do you just feel like they've got a lot of upside that they haven't captured?
Yeah, not necessarily distress, but sometimes they are, sometimes they're not. And a lot of times is that the owner has owned the business for 20 some years and he's been coasting for 10.
Mm,
And so they never actually turn over the team. They never look at their processes. They never update their technology. They never, yeah, they just, it's working. They
it's
don't
mom and
mess with
pa.
it. Yeah, yeah.
Yeah.
I'm trying to, everybody wants to be passive nowadays. So
Are you are you doing a lot of seller type financing on these
yeah,
properties?
it's there.
Or-
There's a combination. Some of them, you should do seller financing because of the way, if there's, it can be the same business,
Yeah.
and one business you're gonna finance and one business you're not. And I'll just give you an example. If you have a business that has consistently growing revenue numbers and margins are growing with those revenue numbers, then you can finance that and pay the guy and just move on because
Yeah.
it's a really good asset.
Like an
But if you're
SBA type
buying,
financing, or
yeah,
what do you
yeah,
typically
yeah,
do?
SBA, mostly SBA,
Yeah.
yeah. And then if you're buying the declining revenue, then you need some type of earn out, you need some type of seller financing. So yeah.
Yeah. Interesting. And how do you find it's intriguing to buy businesses, especially for me, for like home based, service based type businesses, because but with owning a bunch of real estate, that kind of plays well with it, right? But where how do you find these businesses that you're looking to acquire that are
Yeah,
a mom pa type of business?
yeah, just like you would look for real estate assets, pretty much
Are
the
you
same
buying
thing.
them from brokers?
You're gonna find brokers, you're gonna find you're gonna direct seller approach. So you're gonna do both.
Yeah,
And that's just pretty much how it goes. There's no difference.
gotcha. So, all right. So you buy this business. It's got potential for upside, but you're are you just buying one business at a time, working in that business, or are you buying multiple at a time?
It depends. So, if it's an industry that new, that never been, then it'll be one. If if we're like doing a roll-up strategy where we're growing an existing business that we have, we call a platform, and we have a really solid team, we have solid processes, we've proven, then you can go on the buying spree where you can buy, five a year if you want.
Got it.
So it all depends on, what your existing capabilities are.
Take me through then what it takes. Like, what does it take to actually come in and turn that business around, make it profitable? Because your goal, your end goal is to turn around, make it profitable, and eventually exit. Is that correct?
Yeah, so the goal is to really make it resilient, make it meet its potential in terms of returns, and build a wonderful team with a good culture, and just make an impact on that business and on that community. So the way I go about it is the same when I did in my consulting days. Uh, we start with the client experience. So we look at the service, whatever the service is, and then we find out what is from a customer perspective, what is the ideal customer experience, and then we map that experience, and we map what we call like these, feel points, and we want to provide the best experience possible or the best product if we're making product possible. And and we talk to clients, we talk to customers, that's how we get to that. We ask existing customers, what are we doing well, and what do we suck at, and how can we get better, and who's doing it better, and who else is doing it better, and who can we learn from. And then we design a process to deliver that. At first, that process is usually not great because it's clunky, but we don't care. It's not super scalable, but we don't care. We just want to achieve that outcome, like that, the ultimate, you know, uh, level 10 experience, if you will.
Interesting.
And then so once we do that, then we go back to that process and we try to play with it to make it scalable. So we mess with that process until we get it to a point where we have a scalable process that can achieve that 10 experience. And then we find, we write it down and we have the people, we gotta create the profile, the personality profile, the experience profile that we need in each role. And then we laid on top, we laid the technology tools that are going to help these people achieve that consistency for that level 10 experience. And then once we have that, then we bring the supervision that's going to allow the accountability for these people and the full use of this technology to achieve that level 10 experience. And then once we do that, then we observe who do we have in our team and how can we articulate the culture that we have? Because now that we have the system and we have the team, we want to keep that team.
Yeah,
So we
right.
want to understand, what do we have here? Do we have people that like burgers or people that like tacos? We have people that like to listen to, country music, or people that like to listen. So we want to find out, who do we have? What's common among these people? Are these people that, dog people or cat people? Like literally, we go that far. We survey everybody and we try to find the commonalities.
Hmm.
And then we cannot create this profile of who do we have and what is our culture. And then we articulate it back to them and we get feedback. And then that becomes our culture.
Hmm.
And then we hire top management that matches that culture, that understands the level 10 experience and how to maintain it, how to exceed it. And then once we have that management in place, understands the KPI, understands the culture, understands the customers, loves the client, loves the business, then we just, now you either leave it alone and you run it passively, or you sell it.
It's interesting that you're talking about the culture, and a lot of people talk about creating their own culture, and I'm sure you do that as well. But you're also taking into consideration the people that you already have that are in the business, and taking into consideration what they do, like, know, and you're saying this is our culture, and we're going to build a business around the existing people that are here. And so you're it sounds like you're really not trying to not shake the boat too much.
Well, you can't really force a culture. It's
Right.
not a top-down thing. So
Yeah.
it's a bottom-up thing. So you can have some concepts, some principles, but then they have to fit within the existing culture. I
Yeah.
mean, your culture is your people.
Yeah.
So is who they are. So you can't really, come up with something and then just say, oh, this is who we are now. Let's cheer for this. And that's what most companies do. They put it on the wall, they paint the colors the way they want. That's not how it goes. There's a dissonance. And those
Mm.
companies still, even though they have a culture, they have a culture, they don't get the benefit of having a culture. You can say this is who we are, but if the people don't really believe it, they don't really feel it within them, then
Yeah.
they don't buy in.
They don't
Then you
buy
still
in.
have the turnover, you still have the problems, you still have the
Yeah.
same stuff. So you can't like say that, you guys are gonna, now we're all like, we all love to eat pizza when people don't like pizza. They want tacos. So you can't force that. You know what I mean? So that's, to me, you can have some general concepts about, you know, um, about having a higher goal for your business than individual goals. So one of the things that I always focus on, which I learned from Daniel Pink, his book, not motivation, but it has something, it has another name. So it's a book on motivation from Daniel Pink. Highly recommended to any manager, anybody. But he talked about how most employees are not driven by money or at all.
No.
Uh, the main motivation is having a higher purpose than
Yeah.
themselves, having autonomy toward what they do, and having growth. and they feel they're learning, growing, and
Yep.
progressing throughout their careers. So those three concepts have always been built in our culture in terms of like and explaining what is the benefit of a restoration business to that homeowner that we're restoring the business to the home for, and how does that restored home impact that street, and how that restored home impact that street and that zip code, and how the family that's going to live there, the kids that are going to go to school there, the tax revenue that's going to be
Right.
generated, the
Right.
security, all the stuff. So when you give people like a sense of what is the job that
What
our
you're
business
creating.
does in society,
Yeah.
and you zoom out and you give people a view from the top, then they're like, oh my God, I'm excited to wake up in the morning and help these families because that's what I do. I go out and help society and make the world a better place. I don't just work at a restoration business. I don't just create PPC ads for a restoration business. No,
Yep.
this is what
Yep.
I do. I change the world. I'm making the world a better place.
Yeah. That right there is super powerful, right? It's more than just I'm if you're just showing up and you're doing a job and you just don't it just you're dealing with whatever, yeah, and fixing a bunch of crap that's broken. If that's the
Yeah,
attitude, you're not excited to go to work. Like,
correct,
but that's really what you're doing. You're fixing a bunch of crap
correct,
that doesn't work. But
correct.
no, that's not what you're doing.
Yeah,
This is really what you're doing and how you're affecting people and how you're affecting the neighborhood and how you're affecting the full community and all that kind of stuff. So
yeah.
those are,
So you're literally just telling this is what you do, but this is the impact that it has.
yeah.
So people focus on what they do as opposed to knowing what the impact is, and just most business owners never even know how to articulate. They don't know it themselves.
Hmm.
I've spoken to so many people, and they just don't know it themselves. They're like, oh, I just got into this business because it looked good, and I started doing it and made money, and I've been doing
Start
it
making
since.
money. Yeah.
Yeah,
Yeah. You got to take over businesses that have either a really negative culture or have a couple people in there that just don't want to get along. How do you deal with that and get either those employees on board or just get them out? Like what's your kind of thought on
yeah,
that?
yeah. And I mean, there are always people that are like energy suckers within the
Yeah.
business. You need to know if they have any information within them, if they hold any business wisdom within them, and you're trying to extract that. And if they don't, then you just have to give them the opportunity to be happy somewhere else.
Yeah.
And if they do, then you want to get that information out before you do that. You're gonna do that anyway. But the key is to figure out what is it that they know that's needed for the business,
Yeah.
what information they have that's needed, and usually it doesn't take that long to do. Probably like a month, 2 months at the most, before. And the sooner you get rid of those people, the faster the good people activate.
Yep.
What I found is that, I used to go into facilities, factories with, 1,000 people, and I would literally have 3-minute interviews with each person and cut 50% of the the facility. And we wouldn't lose a beat. The production keeps going. Like the guys that were in there that were like that cared,
Yep.
all of a sudden they know who the people that left, and they know what they knew her the whole time.
Yep.
And then they literally activate, and you get 10 times the productivity from those people than you would get otherwise, because
Yeah. I think it's
before they
just
were
human.
just
It's
good.
human nature, right? I mean, you've got, you think of yourself as a factory worker. You're sitting here, you're working your tail off, and you got Jim next door that works with you every day. He shows up late. He takes his lunch early. He complains the whole time. He just doesn't focus. And eventually that kind of wears off, especially when you
Yep.
got Jim and then you got Sue on the other side that's doing the exact same thing. You're sitting here trying to work hard and it just
Yep.
like you're not motivated. They're making the same amount of money as you, and
Mhm.
it's like, come on, they work half what I work. They make the same amount of money. they're always taking sick days. Like, this is ridiculous. I'm just sick.
Yep,
And
exactly.
when they get the boot, you're like, all right, let's go.
Yeah. And a lot of
Re-energizes.
times, even the people that you let go, they're happier as well because they're also
Mhm.
were miserable there because they were waiting to be found out. And they themselves were not happy with it.
Yeah,
They're almost relieved
probably
that
usually
someone,
that's the case.
yeah,
Yeah.
yeah, I couldn't do it myself. So it's always been like an employee that wants to leave and they're waiting for it to be let go, or the boss waiting for the employee to leave on his own and doesn't want to let him go.
Yep. Yep.
So yeah, it's fascinating. I found that 80% of the value that I used to create when turning around businesses from losing money to making money, 80% of it is that first couple months turning over the people.
Hmm. How do
Yeah.
you hire really good people to fit in that business?
Is to hire a lot of people. So it's a very it's a very interesting concept because um, I've hired thousands and thousands of people. I used to go through like 500 resumes a day. So I've developed like a pattern recognition for what works and what doesn't. But even then, because remember I was telling you about the culture. Every business has its own culture. So if I'm hiring for a business in California, it's a lot different than if I'm hiring in San Antonio, and it's a lot different than if I'm hiring in
Hmm.
Georgia. So I essentially have to redevelop. There's a general pattern recognition, but then there's like a nuance that is localized, and
Hmm.
that is like that has to do with that business itself. So what I found is like I'm constantly have to relearn, and for me to relearn, I have to go through a lot of data, which is looking at a lot of resumes and interviewing a lot of people.
Hmm.
So everywhere I go, I don't have like hubris about like knowing who I'm gonna pick. And I don't. It's not that's not happening. But there's certain things like if someone just shows up that you know
Yeah.
there's no curiosity
Yep.
whatsoever. And I mean, I asked them what they did last time. What was the job they did last time? They say, "Oh, I used to work on this. I used to do this job." And I said, "Tell me more about that job. What did you do? What was the? How did you know that you were doing a good job? What was the point of that job? If they themselves, if you have spent 3 years doing something, you don't know how to measure I'm doing good or not, then you don't care. Then you're gonna do the same thing in my business. So I don't really want that
Yeah.
person. You know what I mean?
Interesting.
I need some like basic, basic curiosity about what you do. Basic care about wanting to do a good job.
Yeah.
So I like those people that really care and that really have curious and want to learn, want to grow. And so sometimes it doesn't take that long, but you just have to go through a lot of resumes and relearn for every business.
Hmm. I'm assuming you're just always hiring, right? Is that the concept?
Constantly, you're constantly, so I remember there's a story about Charlie Munger and Munish, who is one of his mentees. He asked him, he told Charlie, you have all these great friends. All your friends are amazing. You must be really good at understanding humans, understanding how to pick people. And he said, no, I'm terrible. And I said, well, how come? All your friends are amazing. You have all these great people around you. He said, no. He said, if you put me in a room with 100 people and I have about 2 minutes to mingle with each person, I can probably tell you very quickly the top three people that are really great quality people.
Hmm.
And I can very quickly tell you what the bottom three are like the worst people. But I couldn't tell you the other 94. I couldn't tell you what they are. So the way I operate is that I ignore the bottom three the same way I ignore the 94%.
Hmm.
And I just pick those three that show up at the top. And I'll
Yeah.
go and do it again with 100 other people.
Yeah. I
So
love
I
that.
always keep going.
I
so
love that.
so the way I think of it, I think the way I used to say myself, I used to say is you need to have talent flow, just like when you need to have deal flow. If you have if you're in the real estate or you're buying business, or you need deal flow
Yeah.
and you need to have talent flow. So constantly be meeting people, talking to people, constantly top grading your team, constantly, taking out the bottom 10%, adding to the top. So it's a consistent process. Peter Drucker, who's the father of management, says that the purpose for a business to exist is to find a customer and to keep it. So just two concepts, very simple. And my kind of tweak to it is that the reason for a business to exist is to find talent and to keep it. Because if you find the talent, they will help you find the customer and they will help you keep the customer.
Man, I love that. Good stuff. What is it? Take me through the mindset. Like, what kind of mind? It's not easy just going in and just buying a business and assuming you can flip it at least the first time or two. What's that mindset? What are the things that really help you, or maybe helped you in the beginning? If you can think back to that.
Yeah, I mean, nothing is easy when you start in the beginning,
Right.
flipping, buying the first house or marriage or having a kid, all scary things. You're going into something that's a little bit opaque, a little bit obscure, and your experience is not guaranteed to be the same as someone else's experience. But I had a little bit of an advantage because I essentially had worked on turnaround teams, on someone else's dime, if you will. I was a turnaround for hire, if you will. So I had that confidence in a way to walk into any business in any industry. I've done turnarounds for slaughterhouses and meat packing companies and lettuce packing companies and
Hmm.
plastic injection molding and
Hmm.
pharmaceuticals, and like it couldn't go far from each other. But I figured very quickly at the end of the day, all businesses are essentially just teams of people. And if you have some elements of an experience on how do you understand the dynamic of a team and how you understand um, how do you if you can make the customer as your North Star, at the end of the day, what are we doing here? What's the goal?
Hmm.
That's what I always ask. What are we doing here? What's the goal? And our goal is to help people achieve. If I'm a real estate team, my goal is to help people find a home. What does that home mean to that person?
Yep.
And how can I help them? Number one, curate. And what is my value proposition as a real estate agent? My value proposition is to curate the right home for them. I'm not there to send them emails from the MLS. I'm there to guide, to help them and how to pick a home. Not necessarily just picking a home, but just how to think about it.
Hmm.
Who are we? What kind of family do we have? Do we want to grow our family? Do we have, are we dog people? Are we cat people? Where are we? And then what neighborhoods are going to work for
Hmm.
us? And what kind of property is going to work for us? Where it's going to be a perfect match where you're not feeling like when you come in that this is home, and you're going to be there for a long time, and you're going to have pride of ownership of that home, and you're going to know your neighbors, and you're going to invest in your communities, and you're going to spend money in your community, and you're going to get to know people, and you're going to make the world a better place. So your kids are going to do better in school if you're staying in the same house and you're a homeowner and all this stuff. So to me, that's what it starts. So what's the goal? So if you're someone who can very quickly go into any business and identify what the goal is, what is the impact that this business does, what do we do here to achieve that impact, and how can we deliver the most impact? So remember that level 10 experience, level 10 product. If you can get your brain to say, okay, this is my North Star, is the client, this 10 level 10 experience, and now how can I, reverse engineer through my process, through my people. And
Yeah.
then as I figure out that process, how can I figure out the people? If you have that ability to lead people and to love your customer, then yeah, then there's no way you won't succeed.
Love it, man. Man, this is great stuff. I love this. A lot of concepts that really apply to my real estate business as well. It's just like it all flows together. What's a mistake that you have made, or maybe something you've just like seen made that like you've really learned from it?
Yeah, I mean, it's a lot of it is about people. Is like holding on. If you have like some really talent, if you're in the real estate team world, real estate sales world, if you have like a really good agent that's that's a talented and that's a closer and that's a he drives volume, but he's not a culture fit and it's not a long term, a long term fit for the company. And the way I say, if I can't
Mm.
spend if I can spend 5 years with somebody, I don't want to spend an hour.
Yeah.
So if I don't if I like I myself don't trust him that much, I know he's full of it. I don't myself kind of like
Yeah.
I'm always like, you know, man, I'm scared of that guy because he's doing taking some shortcuts, doing some stuff
Yeah.
that's not right.
Yeah.
So
And
we
that's a
always
tough person to get
yes,
rid of too, though, because they're
yes,
making your company a lot of
yes,
money. They're a high
yes,
performer, and so that'd
yes,
be a tough person to get in touch with. I'm
yes,
thinking of we own a lot of properties, and I'm thinking of a property manager of ours that was very similar, just so terrible as far as culture goes, and it just like you just didn't want to be around them, but they were doing very well. And it was
yeah,
finally like, I can't do this anymore. And it was the best thing that could have happened. It's funny because I thought they were doing well, but then the profitability just went up
yeah,
after, we got rid of them. And it's like, wow. Yeah, I thought we were gonna be kind of almost like screwed getting rid of them.
yeah.
So
Yeah, that's the hardest one usually, the ones that are the most that seem the most productive, that look like the most productive, those are the hard ones to get rid of. And I think the sooner you can get rid of them, the better because they do so much damage. Not only
yeah,
with they do damage with your clients, they do damage with your suppliers, your vendors, they do damage with your reputation, they do damage
yeah,
with your employees.
yeah.
Employees will quit without even telling you that's the reason.
They're probably bringing other employees down. So granted,
Correct,
their sales might be 5 million, but
correct.
the other employees that are around them, their sales are down by 25% because of that person.
Yeah, yeah, and God forbid they might get people to start behaving like that, and then
Mm,
now you have like a bigger
now you
problem.
have a
It's
big
just like
problem.
it's just a ticking bomb that
Yeah,
you have in your company that you don't want. So you just cut your losses and then move on. The other thing that most people don't do is which I is scaling a bit more aggressively and scaling faster.
yeah.
I learned this thing. It's a great concept from the airlines. I have a friend of mine who's a pilot, and he was telling me that there are more accidents in the airspace, and there are more accidents on the ground than up in the air.
Hmm.
And so most of the airline accidents happen on the ground, and taking off is a lot more dangerous than landing. And that first 400 meter or 400 feet is like they call it the widowmaker. And that's
Mm,
where like most of the accidents happens because you don't have a lot of room to maneuver and a lot of time to adjust. So you really want to like, as you grow in your business, if you have opportunities to take off and put some more fuel into it and push the gas, you want to do that as soon as you can to get to a certain altitude where you escape essentially gravity. And a lot of people don't reinvest. Don't so what they do, they either don't do it or do it at the wrong time. So I'll tell you both. They don't do it because they think they want to prove before they want to get to here before investing here. And when you can't get there until you really invest in people, invest in marketing, invest in equipment, whatever it is that you need, it depends on the business. You want to try to aggressively invest as early as you can to give yourself as much altitude as you can. And then now the other side of it is you want to know what time are you investing. So if you're in the 2010, 2011, you couldn't do any wrong. Any money you spend, you're gonna get a return over the next 5, 10 years. You're gonna get like exponential return.
yeah.
But then if you were in 05, 06 and doing that, then that's not good because you're gonna essentially go down with the ship. So the key here is just understanding which part of the cycle we are, which season of the economic cycle we're in. And essentially, as soon as you have a little bit of a confirmation that we're at the beginning of a bull cycle or at and then you just go. you have to go very aggressive. You gotta, if you have another property, sell it or refinance it, take that money, put it back in the business, and then go crazy um, on growth. So I
Yeah.
think those are two things: fire people quicker, and then invest in the business, scale as soon as you can.
How, where are we in your mind in the market right now?
It's a really interesting question. I was more bearish last year. I'm a lot more bullish now.
Really?
So yeah, so last year we saw the Feds raise rates about 400 basis points,
Yeah.
and the economy still was doing okay. I mean, it didn't, like the Fed started raising in March,
Yep.
and still the whole year the consumer stayed strong. And then through Christmas was still strong, and then right now it's still strong. So I think as long as rates, which the Fed say they're going to keep the Fed fund rate, they're going to increase it up to about 5.25, the Fed fund rate.
Mhm.
I think the market interest rates already adjusted to that already because they anticipate those increases. So it's not like they're reacting after the fact; they react early. So I think as long as they stay in that number and they kind of like keep a lid on the economy, I think we're going to be okay. I think in the last 2 3 years, the economy overheated so much that right now the Fed is just trying to take a little steam out of it. And you notice it even with you hear all these layoffs in the tech industry, like 100,000 people were laid off, but they don't tell you that two things. They don't tell you that if Microsoft is laying off 12,000, they've hired about 60,000 the last 2 years. And now they're getting rid of 12,000. And they don't tell you that those 12,000, 10,000 of them already gotten the job the next day.
Yeah. Yeah.
So,
You're
you know
hearing
what I mean?
about the
So they're,
layoff. You're not hearing. Well, that
yeah,
scary news sells too.
correct. And I talked to a friend who's a COO of a public company, a tech public company, who just announced a 10% layoff. And I asked him, and I said, well, that's a tough one, but when the market turns around, you're going to hire those people back, right? He said, no. He said they were the bottom performers. I'm going to go hire some new ones. So essentially, what companies are doing is just what I call management by crisis.
Yep.
They wait for a crisis to do what they were supposed to be doing anyway, which
Yeah.
is, you know what I mean?
Trimming the fat
Which
a little
is,
bit. Yeah.
yeah, exactly. So that's what everybody's doing. But when you look at the amount of like people they had the last 2 years compared with their land, it's not that much.
Yeah.
So, and then also you look at the consumer. The consumer on average, there's Bank of America came out when they report, they're saying the cohort that usually has between $5,000 and $7,500 in their bank account before 2019, in 2020, 2020 or 21, they had an average about 13,000. So instead of like 6,000, they had about $13,000 in their bank account.
Yeah.
Now they have about 12,000.
Hmm.
So yeah, it's low. They have less cash in the bank, but it's still twice as much as they had before.
Yeah.
And yes, they were talking about, so the way I think of it, 70% of the economy in the US is consumer oriented. 20% of it is government, and 10% of it is CapEx, corporate spending. So you have consumer spending, government spending, and you have corporate spending. So 70% is consumer spending. The consumer has three sources of spending. So income, savings, and credit. So people are making more money as far as their income. People have more savings than they did before. Their credit has never been higher. The average credit today is 716. It went up 2 points from last year, and it won 6 points from the year before. So all 3 points that drive the income for spending are up. So I'm not worried about the consumer. If you look at government, we just passed the Inflation Act, Infrastructure Act of 1 trillion something dollars. That's going to be spent.
They're spending. Yeah.
Yeah, the military spending money on
Yep.
Ukraine and all that stuff.
Yep.
We're like spending quite a bit of money in government. And then we look at the corporate guys are doing. They're saying everybody's saying we're still spending. Yeah, they're cutting some things, but they had such a backlog from last year because of supply chain stuff and plus all the stuff they couldn't get. Now they can get. So now they're pretty much spending what they already allocated, budgeted from last year and the year before. And there's so much new technology and new retrofit they have to do to their businesses because of lack of labor.
Yeah.
And then there's so much retrofit they have to do because people have shifted. So I was talking to a friend of mine who's commercial real estate, and one of his clients is FedEx. So what they do, they essentially they go and find land locations, and they find developers to develop for them, and then they lease to FedEx. It's custom built for FedEx, but then
Sure.
the FedEx will sign the long-term lease.
Yep.
And I was
You're
he
talking
was
like a
saying,
logistics hub, right?
yeah, and he was saying like, both like on the retail and logistics,
Yeah.
distribution centers and all that. And
Distribution
he was
centers. Yeah.
telling me they are busier than they've ever been. And I'm
Yeah.
like asking them, why? FedEx has been around such a long time. They should have all the distribution centers they need.
Yeah. Yeah.
They don't need more. But he was saying no. He was saying two things. One is that people have moved.
Yeah.
So there's more growth in the South and in the Sun Belt. And then the other side of it is that technology has shifted the way they sort packages and the way they do things, that they have to upgrade their equipment and their technology, that the buildings they have to be higher ceiling, have to be different doors, different setups.
Yeah.
So they need different type of box to do those activities within than what they have already. So they have to upgrade their infrastructure. And so for that, they have to change, they have to invest.
Yep.
So the capex is going up as well. So when I look at all these different categories, I don't see a recession. And then the other aspect of it, most recessions are measured in a nominal number, not in a real number. Meaning, when you take the GDP growth, you're not taking out inflation out of it. You're just keeping it as is. And so if we're saying that inflation is going to stay a little bit high in that 3% range, that means we're automatically saying we're going to have 3% growth. Even
Yeah.
if we have zero growth, we're going to have 3% growth.
Yep. Yep.
So there, yeah. So it's the more I look into it, the more bullish I get. And we're seeing inflation come down. It will stick probably in that 3% for a minute till we get like labor and efficiencies and stuff back. And then eventually they're gonna have to cut those rates. I think the Feds just want they just want the Fed fund rate to match inflation. So if they see inflation come down to 3, they're gonna come down to 3, and then we're back into full mode, full bull mode.
Yeah, I think we have some interesting times ahead. I hope you're right. That would be great to avoid a recession. I'm optimistic though. Even if we do hit a recession, it's not going to be a super long, drawn out recession and extremely deep. It's not. We'll see. Of course, neither of us
Yeah.
have a crystal ball. We're not sitting
No.
here saying we promise, but I don't
Yeah.
feel like it's a 2008 type of recession again. So I don't.
Yeah. No,
Having a
absolutely.
great financial crisis.
And it doesn't mean that not people are not going to get hurt.
Oh, always.
People get hurt even in the good
Mhm.
times.
Well,
So
and things are moving fast, right? Things are moving
correct.
fast and changing. And so, yeah, if you are in specific industries, you're probably going to get
Yeah.
hurt and you're going to
Yeah.
feel it. And yeah,
Yeah.
that's just how it's going to be.
Yeah.
Jay, we got to wrap up, but I got a couple last questions I want to ask. What's a favorite book that you can pass down to our listeners?
It's a great old book. It's a business fiction. It's called The Goal by Eliyahu Goldratt. Is an Israeli author, but he's written a series that's a fiction book, but it's an amazing book.
Awesome.
Highly recommend it.
All right. So last question. What are your 3 pillars of wealth creation?
So I think of wealth from a different perspective than, usually I think of it from health, wealth, and relationships. So I want to optimize health because without health, there's nothing.
Yeah.
And wealth is about, maximizing how your earnings and converting those earnings into long-term passive income. So it's a very simple formula. Just, make as much money as you can, convert that into passive income, control your expenses so your passive income can cover all your expenses, and you're wealthy. In my book, you're financially free. And then relationships. So you can have the
Mm,
money, but if you don't have a good relationship with your wife and your kids, then or your mother and brother, and you don't have friends, you got nothing. I
yeah.
believe the concept of there's a concept that the Japanese have, which is, you want to have like five hardcore friends that you hang out
Mm,
with all the time, physically in person, that you laugh with, that you trust, that you can say everything and anything to.
yeah.
I think when you have a good connection with your family and you have a solid five people group that you are connected to, I think you can extend your life by 10, 15 years.
Not just Facebook friends then.
No, 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 no. In person,
Yeah.
laugh out loud,
Love it.
spending, hours together. That's what you want.
Love it. Those are awesome pillars. Really appreciate it. Jay, man, this has been fantastic. I've really enjoyed the conversation, your wealth of knowledge. It's been a lot of fun. So I appreciate you coming on the show, man. And you have a fantastic rest of the day.
Thank you. Thank you for having me.
Jay, I forgot to ask you real quick. How can our
Yeah.
listeners get in touch with you and learn more about what you got going on?
Yeah, I'm available in all the social media platforms at jaybourgana.com. And I'm always doing something new. And if anyone needs any help with their business or thinking about doing any acquisitions, I'm happy to help.
Awesome. Awesome, Jay. We'll put that in the show notes. Appreciate it. Again,
Awesome.
have a great rest of the day, man.
Thank you.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.